Hello everyone, George DeSantis here with a look at the market for the week ending Friday, March 27, 2020. It's been a difficult time. Everybody is, I think many people are stressed out and so many people are very ill and in some cases dying. And so I hope everyone who is listening to this, at least looking at this, is in good health and stay that way. Um, Before we go taking a look at stocks, we bring up a disclaimer. The disclaimer tells you that I'm not a professional investment advisor, and if you need that, you would seek it out from someone who is qualified as such. I'm a psychologist, and I do this for my own purposes, and I put it as a YouTube video, and anyone who cares to take a look can do so. But it's not an attempt to give any particular person advice. I couldn't possibly do that, and I'm not qualified to do that. So let's begin to take a look at some stocks. We begin with the weekly chart of the S&P 500 as usual. Um, First thing, as usual, is we look at the moving averages. Of course, the moving averages are below each other. The 4 is below the 90 EMA, and the 90 EMA is below the 30 weighted moving average. Parabolic is above the most recent bar, so by all these indications here, obviously we're in a downtrend. Um, so that's where the market stands right now. However, um, if we take a look at price bars, the candlesticks as they're called sometimes, some people, I use them, you can see that last week we had a pretty bullish candle here. And when you combine this candle with this, take a look at this candlestick pattern, you have what is a bullish engulfing candle. This is a bullish engulfing candle. And by that order, we should expect higher prices if it were only so simple that all bullish candles, bullish engulfing candles give us an uptrend. But this is one thing that the bulls may hang their hat on for a while anyway, and that is that bullish engulfing candle. Take a look at these levels here. Remember I sent you an article from my friend Mike at Raymond James, and the researchers at Raymond James identified two levels they talked about. The first resistance level was this yellow horizontal line here, 25.59. That's when we were up here. They identified this and they said, look, if we break that level, we'll go down to 22.35, which is just about exactly where we went to. And we found support, it seems, at least for now. So again, we have the market, this chart is looking pretty bearish. There are signs of life here with this bullish engulfing candle. Now, if you look at MACD histogram is still trending down. So one might say that the bears are still in charge according to the MACD histogram. Now, Williams percentar broke below the minus 50 magenta line here, right here on this weekly chart. And it's on the daily chart, you can identify the exact day. However, it's remained there, and now it ticked up a little. It shows us some signs of life here. It's ticking up. So hopefully it will once again finish above the magenta 50% line, or minus 50. The same thing is true of the sum of the rate of change indicator. And if you look at the stochastic, which I put on recently, the 1233 stochastic, you can see the stochastic is now oversold. It's been oversold for a little while, for a couple of weeks. And perhaps it will be an indication that this market is ready to rally from here. And of course, when we take a look at Larry Williams' chart, you'll see that's exactly what Larry Williams predicted, or suggested anyway. Here's a daily chart of S&P 500, and you can see that on Monday we came and hit that 2235, I believe it was. Yes, that support line here. And since then we had 3 nice up days and just one down day here on Friday. But even that bar is showing us a candlestick pattern of what is called a bullish harami. the body of this doji type bar is totally engulfed by this body here. So this is bullish. The other bullish sign here is that parabolic switched to being below the recent bars. And so it's telling us we have a new uptrend on the daily chart. The moving averages, well, the 4 just crossed above the 9 on Thursday here. You can just barely see it. If I open up the chart a little bit, you might. Yeah, you could see it a little bit here, a little better. And so the 9 is still below the 30. I would feel a little more confident that this trend is turning around if I see a number of things. One of them would be if the 9 crossed above the 30. So somewhere around this level here, about 2686 or so. Let's take a look at the other indicators. The MACD histogram is now in bullish territory last 2 days, Thursday and Friday. And so you can see that here. Williams percentile is still below the, what I call my line in the sand, this magenta line. So we need to see that cross above 2. And also the sum of the rate of change indicator is still below the 4% line. So we still have some reason to be concerned that this is not a real strong trend yet. You know, the stochastic was oversold and now it's trending up as this market trended up a bit in the last couple of days. So we have some mixed signals, of course, and we'll take a look at some other charts to try to make some sense of all of this. Let's take a look at some of those charts that we usually look at from stockcharts.com. Here's a chart of Apple. I haven't bought Apple back, but you see there was a nice looking hammer here and it hammered out that bottom. So it rallied quite a bit, you know, quite a bit. I'm still concerned that Apple needs to show me some more strength here before I'm willing to take another plunge at it and buy it. Here's a chart we looked at before, and if you remember, it's that new high new low index, and we had this big plunge here in the number of new highs versus new lows. And remember I said that Alex uses this chart as a leading indicator. And notice this is minus 4,000 here. And Alex points out that when you have this spike down like this, as he calls it, and you move back up above that minus 4,000 line, you get a nice rally from there. From, you know, from his mouth to God's ears, right? I hope he's correct. So there is some other good news for bulls to hang their hat on. Here's a chart of the S&P showing, it's a daily chart showing the impulse indicator. And the impulse indicator is a censoring indicator, as I've said so many times, Alex's indicator. You can buy or sell here because it's blue. It tells you can't go short, okay? So that's a good sign. You should be going either long or holding, okay? Not buy or sell, I meant to say buy or hold. I'm sorry. Now here's a chart of the percentage of stocks of the S&P 100 above their 200-day moving average. It's still in pretty negative territory here. We need to see this above 50%, okay, to get really bullish here again. So this is another reason why I say, look, we have conflicting data here. Bulls and bears are struggling, fighting it out. Now here's that chart from Larry Williams' video that I sent you. Take a look at it again. If you haven't seen it, take a look, because it's really a very interesting. Larry's been around for years, you know, like 50 years trading the market. One of the most experienced guys, knowledgeable guys. And here's a chart where he projects the movement of the S&P in this case. Okay, he says, look, you're gonna get a week ago Friday, he said the market is reacting to fear now. We are in a very key moment here, and the market's going to go up. And that's exactly what we had. We had a nice little rally here, And what he is looking for is a rally up until the end of April. And then, as you can see, a slow pullback all the way into end of May, early June. And then a rally from there, which should be a stronger rally because it will then put a double bottom in place. So take a look at Larry's work again because it's very interesting. Two more charts I want to show you. A couple of charts with the Ichimoku cloud. You could see that even though we had this nice bullish engulfing candle, and that's bullish, we're still below the cloud. So you know, as Larry Davis would say, curb your enthusiasm. In other words, this is a pretty risky market, and you know, you don't want to put all your money into this market at one time. I'm tiptoeing in, I'm day trading, I'm hitting and running, you know, buying and selling. You know, if you're not comfortable with that, cash is king, you know. Okay, here's a chart that Jake Bernstein uses. I put it on here. What Jake Bernstein looks for is a daily chart of the S&P. What he looks for is two complete bars above this moving average. That's a 10-day moving average of the highs, okay? And we don't have two complete bars above that moving average yet. And when we do get two complete bars above it, we need to see this accumulation distribution, Larry Williams accumulation distribution indicator cross above here, the 57-day average. So be careful with this market. This market could, you know, I would say bite you in the rear end if you're not careful. But we are seeing some signs of hope, but hope is not a strategy. Watch at this chart. No two complete bars yet. We might get it this week. It might occur this week, but we also need to see this line above here, the accumulation distribution line above its moving average. Now I find that there are very few stocks that I want to buy and hold for any length of time in this risky market, but I found a few. Here's one, Zoom. I've traded it before, made some nice money with it. I'm going to have to move a little rapidly here because I want to get through 6 of them. You see that Zoom hit the 3 standard deviation line and it pulled back. I sold it in here, this day here, very early in this day here. I think it was Monday, huh? Monday or Tuesday anyway. But now you see it's come back into the value zone and it's trended up again. So Zoom is one. Here's another, it's Teladoc. And you can see on this daily chart, it hit the 3 standard deviation line and it pulled back into the value zone and it's trending up again. Most of the other indicators are looking pretty bullish here. You see MACD, etc. Oops. There's DocuSign. It doesn't look as strong as Zoom and Teladoc, but one might wait for a little bit more of a confirmation of an uptrend here. You see the parabolic is still saying uptrend, but I like it anyway. I'm keeping an eye on it. Here's Kroger, KR. You can see it hit the 3 standard deviation line, the Bollinger Band, yellow line, and reliably when they get that high, they're going to pull back, see? When it gets that high, and so it pulled all the way back into the value zone, and even a little below that, and now it seems to be rallying again, but we don't have these indicators giving us a green flag here, you know? But anyways, one to keep in mind. Here's another one, Ring, RNG, Ring Central, and I've kept an eye on this stock for a long time. I don't own it right now. I wish I did. But you can see that it changed the trend direction here, and all these indicators are showing good. But it's a little bit overbought right now. It's because you see it's bumping up against 2 standard deviations. So perhaps you wait for a little pullback. I don't know. One last one is Slack Technologies, or the symbol is WRK, and you can see that nice uptrend here, and these indicators look bullish here. Might be getting a little overboard, but not quite yet. Here are those same stocks on Shaken Analytic. I have Citrix here as well, and you can see many of them were green on Friday in a very difficult market. So you can see that these stocks are doing pretty well. Well, listen, stay safe. Have a nice weekend, the rest of the day, and We'll try to do this again next week. Bye-bye.